Yo, what it is, YouTube? Welcome back. Yo, what's up, everybody? Welcome back. This is yours truly, KJ the Investor. And if you didn't know, I'm yours truly, KJ the Investor. Y'all, listen. So the intro, I had to do that because it's been a while since we've been on, but I had to take some time to get some work done and some other things done. But we're back. I hope you know that we never went nowhere, never left. We took a day to get some other things done, but these videos are still hot, popping, and going strong. Now let's jump into the portfolio without further ado. Excuse me. All right, as you can tell, today has been a banger of a day. The portfolio sitting at $57,996.72. I've had an increase today. My portfolio today made $494.03 or 0.86% increase on my money. Guys, this is money that got made without lifting a finger. This is money that got made without clocking in. This is why I keep telling you guys in previous videos, and I will continue to say it, that passive income is king. Active income is so unpopular right now. It is so like yesterday's news, right? Okay, passive income, guys. If you don't find a way to make money in your sleep, if you don't find a way to make money not lifting a finger, then you will be working for money for the rest of your life. Guys, this is the way. And to me, one of the easiest ways is being in the market. So many people are still scared to jump into the market. They're still concerned. I don't know if this stock going to go up. I don't know if that stock going to go down. Look, guys, there's plenty of ETFs out here that has different companies in it that provides that protection. It provides that that willingness to participate with the stock market. Excuse me. But anyway, all right, let's take a look on down. Robinhood has some new features as well, guys. They show you now your profit and loss. Okay, I'm just looking at some stuff. All right, now let's see. Earlier, I had a question. Somebody asked me, why do I have VU and SPLG? Well, both of those are the S&P 500. They track the same sector. As a matter of fact, let me show you. VU right now is the Vanguard S&P 500 ETL, $552.38. VU is up today 0.56%. And after hours, 0.01%. I got 1.19 shares of VU, $662.21 is the market value. Average cost back when I bought it was $445.36. I have a total return of $128.30 or 24.03% increase on my money. Guys, excuse me. Back when I bought VU for the very first time, that was the very first ETF I ever purchased when I first got started when investing. But the price was so expensive. Like I said, I had it was $445 that it cost. So I ended up finding and discovering SPLG, which is also another S&P 500 tracker. So here we are. SPLG is the SPDR portfolio S&P 500. Right now we're trading at $70.67. Same thing. It's up today by 0.53% or in the after hours 0.01%. I got 183.70 shares of SPLG. I know somebody's like, dang, yo, wait a minute, KJ, you got the same amount of shares that you had last week. What's going on? Did you stop investing? Why haven't your shares increased? That's a great question. The answer to that question is no, I haven't stopped investing. I did have to take a pause, like I said, because life happens. Life happens. Deers are real. I drive a lot of times to work at night, early in the morning on the interstate, and deers are real. I don't know if it's mating season. I guess it is. Or I know it's hunting season. It was bow season one time, but I guess they're not getting to the deers like they need to. Anyway. Yeah, so I had to do what I had to do because one of them tried to jump out there with the antlers and hit my car. But it's okay because guess why? When you got money put to the side, they'll be able to take care of things like this. You can take care of things like this. Anyway, market value is $12,982.54. And also, that's why I tell you guys I always have an emergency fund. Continuing on, average cost is $62.60. Total return, $1,481.74, or 12.88% increase on my money. So, same thing, track the same sector. It tracks the same stocks that are inside of the ETF. SPLG is the broader stock market. You guys, you should know that I am investing in SPLG very, very heavily right now because it's the foundational ETF. This foundational ETF. ETFs, guys, stands for electronic traded funds. Electronic traded funds. And it is a passive way to invest in stocks that you don't have to be the expert about. Let me try to break this down. The SPLG, also VOO, also SPY. You get a lot of y'all use that SPY ETF. All the three of these and more, if there's more out there, they track the S&P 500. Those are the top 500 companies in America. The 500 top successful companies in America, I may add. So I always make the broader stock market, my base of the stock market. You can either do the broader stock market or you can do the total stock market. For me, I always go SPLG or the S&P 500 because that's broad enough. Normally, the broader stock market has between a 7 to 10% rate of return. And for the last 100 years that the stock market has been in existence, 16 of those years ended with a recession. But yet and still, over the course of the 100 years, there has been a stock appreciation or a portfolio appreciation of between 7 to 10% yearly. So that means, and what does that tell me is, no matter if it's a downward year, upward year, or what, over the last 100 years, the stock market and people who used to put their money in the market made money. I'm not saying that you're guaranteed to make X amount of dollars or whatever, but I am saying that the whole purpose of the stock market is to make money. It's not to just throw your money in something, hoping and wishing that you'll get a return, hoping and wishing that it grows, hoping and wishing that you'll still see it. And then you don't know what's going on. You're nervous. You think you're going to lose all your money. Things going to fall apart and this and that and the third. So I wanted to go ahead and address that and go ahead and counsel that thought out your mind. You guys, the stock market's not bad. It was the whole purpose of the stock market being created is to make money. That's what people have been doing for a long time. That's how millionaires have been formed for many, many years, is through the stock market. And to me right now, there's no better time. There's no other better time in the history of the world to make money as right now. To transfer this wealth from rich America, transfer this wealth from big businesses, transfer this wealth from companies, ETFs, baby boomers, you name them, whoever, into your pocket. And I'm telling you, you got to have some great arsenal in order to do that. If you want to participate and if you don't want to be stuck on the sideline, you want to put your money to work. Like I always tell you guys, you got to make your money work for you. It's not enough that you have to wake up, go to work, clock in, and work hard for your money, and your money never works for you. That's just not enough. You will always be working for money for the rest of your life if you continue trading time for money only. If you only continue trading time for money, you will always work for money. Now, what happens when you get older? What happens when you at a point when you don't feel like doing that no more? What happens when, you're like, man, I can't afford to call out today. I don't feel the best. I don't feel great, but I can't afford to call out because I got this and I got that to pay. No, you guys know that. So that's why I will tell you, put yourself in a position to win. I can't tell you what to do, but I can tell you what I do. I put myself in position to win. And that's exactly what I recommend for whoever here's this video, whoever follows the channel, is put yourself, no matter what that looks like, it can be real estate, it can be paper assets in the stock market, or it can be starting a business, and it can even, not only those three asset classes, those are my favorite three. And those are the three that's proven to be around for years and centuries and years. But crypto, you got Dogecoin, Bitcoin, you got silver, you got gold, you got all these other asset classes that people, find a way to put wealth into. So, like I said, whichever asset class works for you, I named the three that work for me, and then I named some additional ones. I'm not, if you follow me, you know that I have some crypto. I'm in some crypto, but I'm not a big crypto guy. I'm not a big silver gold guy. But yeah, even I do have a property in real estate, and I do have, as you've seen, paper assets, and I also do have business and side hustles and things like that. So those are ways that you're going to increase your net worth faster by getting multiple sources of income and pouring the gasoline on the fire, I like to call it, by investing big boy blue chips, long term, the S&P 500 long term, and just being patient, diligent and patient, and just staying consistent and building up that net worth one check at a time, one contribution at a time, and getting that stock appreciation and getting that ETF appreciation over time, getting that compound interest effect to really kick in. The eighth wonder of the world is called compound interest. So getting that compound interest, which only comes with time, to jump in there, man, that is when you really start seeing the chips stack up in your favor. That's when you really start seeing the fruition of those 6-figure net worths and those 7-figure net worths. And that's when you really will start to see these things happening in your life. So what I do want to tell you guys is, if you don't do nothing else, I recommend, this is what I do. I establish a S&P, a foundational ETF. For me, that's the S&P 500. And I'm putting big amounts of money into that foundational, because next year, we're going with the growth. We're going to hit growth even more. I got a specific sector that tracks the technology sector, ETF. It's called FTEC. And then I also have a big ETF that tracks big dividends, SCHD. And those three right there, I'm going to be contributing into them heavily. And in those three, I don't have to be the expert. But when I buy stocks like Nvidia or Apple or Microsoft, when I buy those stocks, I have to be the expert. So when the price per share goes down, Nvidia, even after a great earnings report for Q3, Q2 was off the chain as well. Q3 was even better. And Q4 outlook is even better. But even though that all went up, we still have people betting against the stock, people trying to drive it down into the dirt. But guess what? We don't fret, we don't fear. That's more opportunity to buy more shares of the stock because it's a successful company. But anyway, I digress. I don't want to digress. So what I want to tell you is, you don't have to be the expert when you pick a ETF or 2 or 3 ETFs to invest in, but you do have to be the expert when you pick individual stocks, and you have to live with those gains and with those losses when you do pick those individual stocks. So be careful with that. Like I said, I like throwing majority of my money into those S&Ps or into some type of ETF that's going to help my money grow, because that's 80% of the work. I do not have to be the expert. I don't have to know if the such and such company in the S&P is still living up to the standard, because the ETF fund will kick that stock out of that ETF. So just for example, if SPLG notices that Tesla has underperformed 3 quarters in a row and it's now in danger of being kicked out of the S&P 500, SPLG will take care of that for me. I don't have to lift a finger to go in there and sell all my shares of Tesla. I don't have to do that because the fund does it for you. And that's just one stock. Tesla actually doing great right now, but that's just one example. If you want to grow your wealth, if you want to see better days, easier days, if you want to be able to buy anything on earth one day, you guys I just ask you to consider investing in a broad-based ETF for the long-term, big boy blue chip style, buying whole, staying patient, staying long, buying consistently. And I promise you, you'll build that wealth up to a place where you can look back and be like, wow, there it is, 6-figure net worth. So you guys, I don't want to hold you up. I hope you found some type of value in this. There's a whole lot of value in this. Don't worry. The videos are still coming. We're still hot. We're still pushing. And I want you guys to really think about what I said. Make sure you develop that broad-based ETF, man, because it's going to help you in the long run. Because when other stocks go up and down or when other investments go sour, guess what you got to hold on to pull you back up? You got your broad-based ETFs. You got your base. That baseline is what's going to help propel you to that millionaire status. So, guys, this has been another episode of KJ the Investor. It's yours truly, KJ, signing off. I hope you enjoyed. Peace.